Sometimes you meet a trader who doesn't just read the market, he interprets it, not with hype, not with ego, but with clarity, patience, and real skill. On this episode, I chop it up with Matt, the mind behind Tiresias Trading. He's not out here with flashing profits or chasing clout. Instead, he's building systems, building consistency, and helping others to level up through deep understanding of structure and risk. This convo is a masterclass in calm execution, from trading philosophy to process, from mindset to money management. So whether you're new to the game or sharpening your edge, lean in. This one's got some gems. Let's get into it. What's happening, guys? It is Woods. We are back with the NOFOMO Podcast, man, and we have a special guest in the building, Trader Matt. What is happening, Trader Matt?
Woods, it is going, man. Everything is well. Everything is well. Busy, both personally and professionally, but everything is very good.
Oh man, that is good to hear. I mean, it's always good to be busy, right?
Absolutely.
Man, so I'm very excited to have you on, man, because I wanted to have a conversation with you about your journey, man. And you know, because I see that you're very consistent in what you do, man. And I love the way you break down your pairs. It's very, very motivating, very impressive to watch you work. So tell me, man, how did you first get into day trading and what inspired you to pursue it seriously?
Well, first of all, I appreciate the introduction. Flattery will get you everywhere. So yeah, no, I do appreciate that. But yeah, it's been a journey, my friend. It has been quite a journey. So I mean, to really kind of get into the back of it, I'll probably let me just get you kind of up to where I am now in a few minutes here, and then let you ask any questions where you'd like. So
Okay.
we got to go back to the subprime mortgage crisis back in 2008, 2009. I'd been out of college for a couple of years at that point. Not enough to have a house or a mortgage or necessarily worry about any of that stuff, but I had a lot of friends, family that, as you know, went through some things during that time, right? And one of the main things that kind of stuck out from that was, at the time, my dad was starting to take over his mom's finances and some other stuff, because she was starting to slow down physically and mentally. And both him and her, at the end of the year, lost money in the markets because of the crash of 2008. And so they, he was very, this is a lot of traders' origin stories. He went to, their financial advisors, and the financial advisors like, okay, we lost this much money this year. Oh, by the way, here's my bill. Right. And so it was one of those situations was like, well, why am I paying somebody to lose my money? I can do that for free. Right. And so he started to look more into investments and things like that. And I started to, so I'd stop by, pick up a book here or there. And I got really into it after a couple of conversations with friends that were starting to trade small cap stocks. And so probably about 2010, I started looking heavily into it. Now, I was still, at the time, I was teaching, I was coaching. My ultimate goal at the time was to be a college basketball coach. That was what I went to. I was a sports management major in college, and that's what I wanted to do. However, in getting, early on in the process, I like a lot of things, I always thought I'd be the exception rather than the rule, and that I wouldn't need to spend my first 15 to 18 years on the college coaching circuit making no money and traveling to, all over the place and moving every 3 years. Well, of course, that was the process I was staring down, and I just didn't really want to do that. And to be honest, I know it sounds a little petty, but I was tired of being poor. So, I started to look into a lot of these financial newsletters and stuff like that. And I really got into Bill O'Neill's book, How to Make Money in Stocks. Right. And it's an approach that is maybe a little dated now, although there's some great insight in that book. His whole can slim methodology taught me the importance of having a trading methodology, even if I don't literally use anything from that book today. But then it was about 2014, and I put a little money away, and I'd kind of gotten to the point where it's like, I think I can do this now. So I did what I never recommend anybody do, and I never recommend it because I did it. It was one of the dumber decisions I've made, even if it worked out long term, was I quit my jobs and I started to trade full time, and I got into the small cap world. Needless to say, that went about as well as you figure that it would. and I lost most of
Wow.
my savings over the course of the next 6 months. And it was then, so it was kind of late. This was December 2014, and I said, you know what? You don't know what you're doing. You're losing money hand over fist. It's time to step back and recalibrate. And I basically hit the reset button on my career. Everything that I had read, everything that I had done, I went back and looked at again, and I started really grounding myself in technical analysis, and specifically, I got really into candlesticks, and specifically Steve Nison's teaching. That's NISON for anyone who wants to look him up, and that really started to ground me in. I know this is going to sound like an oxymoron, but the fundamentals of technical analysis.
Hmm.
And a lot of things started to make sense at that point. And then I realized the small cap world was kind of dirty, and got out of it and started getting into large caps and a little more reliable movement. I didn't have the equity, even if I never lost a dollar, I wouldn't have had the equity to get heavy into large caps. So I found my way in the world of options.
Hmm.
And one of the individuals I learned option from was a woman named Sarah Potter, who at the time was running a trading room and all that kind of stuff. And so I fell in with her for about a year or two. And through a couple of conversations I had with her, she kind of encouraged me to get into the world of coaching. And I actually then, when she sold her company to TradeStation, I went to work for her for a couple of years and ran my own alert service, trading room, all that kind of stuff. And we did really, really well. TradeStation eventually decided they didn't want to be in the education business anymore, which I don't blame them. We made money, but it was a drop in the bucket for a multi-billion-dollar international company. And so a couple years ago, I kind of got out on my own. But in the process of about the last 4 years, not that I don't do options, I still do some options and IRAs and stuff like that. But I got really into day trading futures at the urging of one of my fellow coaches over at TradeStation.
Hmm.
And it was still a process. It was still a learning process and a learning curve. But most of the risk management tools and the technical analysis that I learned when I was doing stocks and options applies very well in the futures market. So it was about 5 years ago I started learning futures, and about 4 years ago I started doing it full time. And it was the right decision because it's been a very lucrative one. So things have been going very well since then. I've been out on my own the last couple of years, just doing a little freelance education work. My
Hmm.
company, Tiresias Trading, is available at tiresiastrading.com, TIRESIAS trading.com. And I run a small community there. We don't do a lot of live trading or anything like that, but it's a playbook based community and a mentorship based community, because that's what helped me,
Hmm.
is building out watching somebody else trade is good. You can learn up from that to a point. But at
Hmm.
some point, you've got to come up with your own setups, your own playbooks. And so that's what I predominantly teach traders right now: how to build, develop, revise, and deploy their own playbooks. And we do it together as well. So it's something that is basically how I learned how to trade. And so I really enjoy doing that. And then, of course, trade on my own, and looking forward to continuing that as long as I'm physically able.
Wow, man, that is amazing. That's an amazing story, man. And you've come a long way in your process. Tell me about, what are some of the biggest challenges that you faced early in your trading career?
Well, it's I would say the biggest challenge that I face, that all traders face, is getting your psychology right, your trading psychology. And
Hmm.
I know that there are traders out there, and especially some very loud voices in the industry, who think that that's trading psychology is bunk. But I couldn't disagree anymore.
Hmm.
Yes, you do need systems and to follow those systems, but the ability to do all that comes from having the right mindset and having your trading psychology right. Not just buying because you think it's going to go up, or selling because you think it's going to go down. That's great. Tell me why. Show me the pattern. Show me the playbook. Show me the statistics. Show me the edge. Right, and then I'll be willing to take that trade. But yeah, having the right mindset and having the right trading psychology is something that I struggled with for a while. I read the book The Disciplined Trader by Mark Douglas.
Hmm.
I think it's mandatory reading for anyone who wants to trade, invest, anything, regardless.
Indeed.
And one of the main things he talks about is our relationship with time and money, right? I'm sure you've heard the phrase "time is money," correct?
Correct. Correct.
Yeah, and that's something that we hear all the time, and
Hmm.
it is true, but not necessarily in trading, right? So everybody listening to this, yourself, myself, we've all worked an hourly job at some point in our lives, right? And let's say you do, it doesn't matter what it is, flipping burgers, you make $10 an hour. Okay,
Hmm.
if you work an 8 hour shift, that before taxes and all that kind of stuff, you made $80. Okay.
Hmm.
So we have that relationship of time to money, similar to salaried workers, right? Like my fiance, she works in supply chain, and she knows, she's if she sticks in her job for a year, she knows how much she's going to make before taxes,
Mm,
again, all that stuff, right?
right.
So it's a relationship of time to money. Trading's not like that. We have the ability to make or lose significant amounts of money on a second by second, minute by minute basis. And that
Right.
takes a recalibration of our heads, right? Because we
Mm,
don't just expect there's no other job, virtually no other job that you can walk into and with the push of a button make $5,000 in 30 seconds, right?
right.
Especially coming from without a ton of money. And
Mm-hmm.
so we're often not prepared for that. We're often mentally not ready for that. And
Mm,
so it's all about kind of redefining that relationship of time with money. And I've personally found when I'm not thinking about the money, when I'm just focusing on the work and focusing on the methodology, that's where I do best. Yes, it's
mm,
great at the end of the day to look at your P&L and see a nice four-figure green number on there, right? Or even
mm-hmm.
higher. But
Mm-hmm.
it really is, as cliche as it sounds, it really is about the process and
Mm.
trusting your process, developing your process, deploying your process, and all of that. So that's probably one of the bigger challenges that both I and newer traders face.
Right, right. So like can you describe a major turning point in your trading journey? Like when did things start clicking for you?
Well, I'll go back to what I was telling you about that my early career, and I basically lost about 40 grand in about
Hmm.
3 months.
Man.
And so I'm sitting there, and I remember it very specifically. I can't remember the date off the top of my head, but it was a day in December in 2014. And I
Hmm.
remember after losing about $1,500 that particular day, and this is swing trading, mind you. This is not like three dumb day trades, right?
Hmm.
And I went up and I'm sitting on my bed and I just started bawling. I mean, I'm not ashamed to admit it. This point, I was crying my eyes out because I was thinking, A, I got to go back to the jobs that I didn't enjoy and that didn't pay anything
Mm.
and beg to get them back, right?
Right,
I have
right.
to uh, basically, for one of the first times in my life, and I'm a competitive dude, but I had to admit that I failed miserably.
Mm.
But I went to bed that night expecting the next day to just give it up and go back to life. And
Mm.
something, I don't know, something clicked overnight and while I was sleeping. And I woke up and I said, you know what? I'm way too stubborn to give up on this. So I basically, that's where I said, your career start. This was a Sunday I woke up. Or excuse me, a Saturday that I woke up after a Friday trade. And I said, all right, you're going to take today and tomorrow off. You're going to recharge. Monday morning, your
Hmm.
career restarts. And everything you've learned, you forget it, you redo it, all this stuff. I went back, read the books from a different perspective this time, right? Because the
Mm.
first time I read The Disciplined Trader, I read it before I'd made a single trade, and I'm like openly laughing at the things in the book. Like, what moron would make these stupid decisions, right? Well, of course, I went and made all of them, and it's the old saying, I don't make the same mistake twice, I make it 5 or 6 times just to be sure, right? And so I come back from all that, and I spent about 3 months just learning. I would check the markets, a couple times a day, but I would just it was 3.5, $4 before I made a single trade again, and then it was paper trading for a couple of months, and
Mm.
then I finally started to get back into it. I scuffled a little bit, was basically break even for about a month,
Hmm.
and then kind of started to make some small, consistent returns, and that's when I kind of made the switch to a little better asset class that sort of fit me a little better, and
Hmm.
I just started trusting what I was seeing on the charts, and you know uh, you have to losses are part of the game, and I think there can be an advantage in most of us take a lot of losses to start with. They're going to be an advantage of that because we're used to it. But if you
Hmm.
let it discourage you and you let it just knock you off your game, that's where you begin to compound your struggles and stack your struggles. Where with newer traders, we want to be stacking some of those successes, even if it's not always monetary success, right? It's okay. I set a stop loss. I stuck to it. Okay, if that's something you have struggled with, if you've been a bag holder in your life and now you're taking your losses right, that's a step in the right direction, right? We don't
Right.
celebrate huge, or little things along the way, but we do acknowledge that, right?
Hmm.
Like I always tell people when they pass an eval or with one of the funded trader companies or prop firms, or they take their first payout. Okay, that's not the ultimate goal. The ultimate goal is to make a lot of money and be taking consistent payouts. But if you take your first payout, you can take a few minutes and appreciate it, right? I
Hmm.
always tell people, you take your first payout. I don't care if it's $100 or $10,000. go somewhere and buy something little, like a Snickers bar. You like Snickers, but you swore them off for a few months because you were losing money. Go buy something you enjoy for just a couple of bucks and just acknowledge it, right? Don't go buy a Ferrari or anything, unless you
Right.
have millions and you've been making millions. But yeah, just take a small acknowledgement. It's okay to pat yourself on the back from time to time, but then get back to work.
Mm. That's real talk, man.
Hmm.
And I appreciate that transparency, man. It's just a straightforward view without all the fluff.
Hmm.
And being one thing that impresses me about you, man, is the fact that you're consistently doing this full time, and it takes
Hmm.
a special thought process to be able to get into the zone and remain in that zone. So tell me, how do you balance trading with your personal life, especially on days with high market volatility?
Well, I mean, for me, it's we always see these. I have a dummy email address that I'm on everybody's marketing emails, right? Prop firms,
Hmm.
education firms, et cetera, et cetera.
Right.
And you see all these emails that say like the 10-minute workday or how I made $10,000 trading for an hour. And
Mm,
listen, I don't appreciate those as a fellow educator because I know what they're trying to do. They're basically saying without saying, "Hey, just come follow me, do exactly what I do, and you'll make a ton of money." Well,
mm,
just in the prop firm industry in the past week, we've seen how some of that ends, right?
hmm.
And so but there is some truth to the fact that once you've been doing this for a while, you can sit down and work 2 to 3 hours and do pretty well with it. And I mainly trade from, I'm in the central time zone. I mainly trade from about 8:30 to noon. That's about what I do for the market sessions. And then I have my community meeting with my community, and then it's education stuff. It's helping out and with some other stuff and taking the dog for a walk, all that. Yeah, I will. I still do a lot. That's when I do a lot of my content, and that's when I have my Beyond the Bell Market Rap Show available on YouTube. Tiresias Trading. Just search
Hmm.
Tiresias Trading, and you can get that every day, about 15 minutes when the market closes. But that's the stuff that I enjoy because trading can be, well, no, it is. It's a pretty lonely endeavor. Right?
Hmm.
You're sitting staring at your screen for 3 to 7 hours per day, and yeah, we're all part of discords and stuff like that. But I mean, that's nice, but that's not
Right.
a human connection.
Hmm.
And so, how do I balance it? It's not, I think the only people that have trouble balancing it are the ones that feel like they need to trade 12, 13, 14 hours a day. And
Mm,
I think that's unhealthy. I mean, unless if you make, I mean, I don't know who this would be, but I'll just throw an example out. Let's say per year trading, if you make $100,000 trading 3 hours a day, but if you trade 10 hours a day, you make $1 million. Well, sure, you should probably do the 10 hours a day for a few years just to build
mhm,
up a little equity. But in most situations, I mean, again, it's not a direct time to money relationship, but in most situations, you're not going to make that much more trading 8 hours versus trading 5 hours. So that's why we get into this for the money's great, but it's the freedom. And
mhm,
I can honestly, if I wanted to, I'm going to get up and trade tomorrow. Markets are open. Hopefully the markets give us something to trade. I'm going to trade. But you know what? If I woke up tomorrow and said, you know what? Yeah, F this, man. I'm not feeling it today. You know what I don't have to do? I don't have to put in a sick day or a PTO request with a boss. I don't have to
uh-huh,
call coworkers to cover for me. In my situation, I have a community. I would just post something in the community, say, hey guys, we're off for today. And thankfully that doesn't happen very often, but I have that freedom.
right.
And so that's what it's all about. And I think that's something traders need to focus on. This is not a scoreboard. Yes, we're here to make money. If you're not in this business to make money, get out. That just end of story, end of discussion, get out.
Mhm,
However, this isn't a scoreboard, right? And that's where the YouTube traders and the Twitter traders, I don't care if they're legit or not, but it bugs me because it creates this scoreboard mentality. Now,
mhm,
I'll tell newer traders, just try to get through your first few months of trading, learn the ropes, take your lumps. Everybody does. And then it's just a matter of focusing on making, let's even just say to start with, you're trading part-time and you're shooting for an average. You're not going to do this every week, but an average of $1,000 a week. And you're trading all but 2 weeks a year. It's $50,000 a year. I mean, is that a ton of money? No, but
mm,
think about how much a difference that makes for just anybody listening to this. If in 2025 you knew you were going to make $50,000 more dollars than you did in 2024, that's probably a pretty big life situation there for you, right? And then
mhm,
after a few more months, then you work on, you build it up to where it's okay. Now you can do 500 a day, or et cetera, et cetera, and it just scales from there. There's people in this business that are far more ahead of me when it comes to some of those numbers, But
Mm,
I feel like I'm on a very good trajectory where in the next 5 to 10 years, if I wanted to in 5 years from now, I could just say F it and be done. I
mm,
have no intention of doing that. I enjoy it too much, and I'm pretty good at it. But that option is there, and that's the freedom that people really need to buy in. Don't look at it as money. Don't look at it as a scoreboard. Look at it as a skill that needs to be mastered that can very literally change your life.
mm. So like let's dive into your practices and strategies.
Mhm,
What is the
mhm.
primary trading strategy for you and how did you develop it?
I would say probably the primary strategy that I use is one of the things I've always been big on is actually something that's extremely simple, which is moving average crossovers. So let me
Mm,
tell you about a strategy we're developing in my community right now, and then I'll circle back to one that I deploy fairly regularly.
okay.
So we're doing one called the Keltner Cross, and at the very basics, there's a few things to consider that's tough to describe on an audio only thing, but it's basically a 3/8 exponential moving average crossover within Keltner channels.
Mm-hmm.
Okay. And so that's the very basics of it. And we traded every day. We do our journaling. I can't tell you that it's going to be something I trade in the next 5 years. I think it's going to be. I think it's going to be something that we do for quite some time. But I've developed tons of strategies. Probably over half the strategies I put dozens of hours into developing just get tossed, right?
Mm-hmm.
And so that's part of the process that we're going through with that. And actually, I will say the one thing I took that I still probably use from Bill O'Neill's book is where he talks about his big pattern is called the cup and handle pattern. And
Mm,
at its core, all it is any market makes, it doesn't matter what asset, market makes a short term high, and then within a certain period of time breaks that short term high to the upside, or vice versa, right? We make a short term low, and then 5 minutes later, 10 minutes later, we break that short term low.
mm,
So I do a lot of things now. I started about 2 years ago. Candlesticks are the basics of everything that I do, and I'm always looking at candlesticks. But I started getting a little more into Renko charts. And Renko charts are very easy to see, at least within time periods, given time periods that you set them up for. Uh, Short-term highs and lows. Whereas in candlesticks, yeah, you can see it pretty clearly, but it takes a little more room to decipher. So I'll look
mm-hmm.
for, like, let's say on a Renko chart, let's say the NQ is going up 50 points and it stalls out at 20,000, and
Mm-hmm.
then it retraces to about 19,970. But then 3 to 4 minutes later, it goes up. And now I'm not going to enter a trade at 20,000. I'm just using these numbers for simplicity. But
Right.
now that we've broken that short term high, most times, depending on candlestick patterns, market internals, etc., I'm going to be very interested in going long at that point, trying to catch a quick 20, 25 points, 2 to 3 mini size, take a few $100 or $1,000 out of it and move on. And that's sort of my strength is risk management. Our mutual friend Josh is fond of saying, and he's very accurate on this, we're not in the trading business, we're in the risk management business. And
Right.
that's the skill that newer traders need to develop, because I promise you, if you develop that skill and you stick with it, any asset class you decide to trade is going to be, I don't like to use the E word in trading, but it's going to be easier to transition between asset classes. It took me a long time to get good at trading small caps. Then it took a slightly less longer time to be good at trading large caps through options. And then it took me only really about 6 to 7 months of consistently working with futures to start getting good at that. Now, it took me a couple years after that to scale up to the point where as opposed to being an extra couple $100 a day, it was a little more than that. But it's all a process. And the other thing I will say before we move on is, everyone wants to, and this is kind of, again, the nature of the beast with the YouTube traders and some of the way the prop firms are structured. Everybody thinks they need to make $10,000 tomorrow, even if it's their third day of trading.
Mm,
Just develop the skills, work on building out $100 trades. Then you can increase. Start with 3 to 5 minis, work on making $100 to $200 a trade on
mm-hmm.
average, right? Especially on your winners, and then build up to 200, 250, 300. Slowly increase size, et cetera, et cetera. Once you get to the point, and I don't like to use hyperbole, and I don't like to use, some of the stuff that again, some of these idiots out there use, but you get to the point where you sit down at your computer and you turn it into an ATM every day. And that's exactly what we're trying to do. But that doesn't happen overnight. And that's a tough thing to teach people. I believe people can become partially profitable after a few months or a year or two, but to get really good at this is going to take 3+ years, because you have to see everything that the market throws at you before you get really, really comfortable. Just since COVID, we've seen insane things in the market. We've seen almost every kind of day that the
Mm-hmm.
markets can throw at us. And when you see that every day, day after day, um, that's where you begin to develop those skills and you learn to not panic into or panic out of trades. When I first
Mm,
got into day trading, I remember I asked a buddy of mine who had done this, this gentleman from TradeStation. I said, okay, I'm moving into day trading. What's the most important thing? And he said, there is nothing more important than screen time. Being there and watching the markets day after day after day, even if you don't exactly know what you're looking for to start with. Our brains are amazing pattern recognition machines. And
mm.
so when you're able to see these things develop day after day after day after day after day after day, that's where you begin to gain the confidence to make the trades according to your system and your methodology.
Man, that's so true. And I like that you touched on risk management because I want to expound on that a little bit more. Tell me,
Mhm.
how do you approach risk management in your trades, and do you have specific systems for cutting losses?
Well, so it usually this comes down to my entire trading methodology. Okay.
Hmm.
And you have to have that as a trader. Now it varies across asset classes. It varies across, depending on specifically what you're looking at. I'm more what I call an intraday swing trader, right? Like I'm
Hmm.
a day trader. I'm in and out of positions, but if I can help it, I'd like to be in 10, 20, 30 minutes, sometimes more, and let stuff run. Now, sometimes I'm in and out in a minute or two if it hits my profit target, but it's all
Hmm.
about your trading methodology. My trading methodology is to take, on average, 3 to 4 to 5 trades per day.
Hmm.
And my risk reward ratio is approximately 1.5 to 1 or
Okay.
1.8 to 1, right? And that, so let's use 1.5 to 1. So let's say, just for simplicity's sake, I'm trading the ES. Okay.
Hmm.
I am willing to risk 10 handles to make 15.
Hmm.
Okay. So as long as my risk to reward ratio is honored in my trades, that's how I manage my risk. I don't overthink a lot of that stuff. If I'm going in the NQ, I'm going to try, I'm okay risking, um, well, I don't usually take 20 handle losses, but let's say I'll risk 20 handle losses to make 30, right?
Hmm.
And as long as I'm winning over 50% of the time, and I don't even have to win 50% of the time to be profitable with a 1.5 to 1 risk reward ratio, or in that case, reward to risk. But if I am, and my winning percentage over, like the last I checked, is closer to about 57%, I'm going to consistently make money. That's just the nature of it. If I'm taking um $1,500 wins for every $1,000 loss, and I don't usually let losses get that big, and I'm winning 58, 59% of the time or 57% of the time, I'm going to build my account.
Hmm.
Slowly, surely, consistently, I'm going to build that account. And so that's having that methodology and having that understanding before I go into any given trade is vital to keeping that P&L going up.
Hmm. So walk us through your daily trading routine. What does a typical trading day look like for you?
So I get up. I'm on Central Time, as I said.
Hmm.
I typically wake up usually about 6:30. So about 2 hours for the New York markets open. Very
Okay.
simple. Go downstairs, take the dog out, make my coffee,
Hmm.
and then so usually I'm at my desk, ready, getting ready to start the day. About 10 minutes after I wake up, usually by 6:45 Central Time. I'll check the markets, I'll check overnight news, all that kind of stuff, and I don't typically do a lot of trading until the New York session. Although I tell you, I'm looking more at a few pre-market ideas. I'll probably
Hmm.
start just playing around and paper trading with them in probably after the new year. I probably don't have time right now to add a whole lot to my daily routine. So then the markets open. I usually sit out about the first 15 minutes, just let the markets develop, let the big boys get their orders in, let the algos start to play, and just see the patterns develop at that point and look for my setups. I trade when I have a setup. If I don't have a setup, I
Hmm.
don't trade. There are some days I stare at my monitors 3 to 4 hours and don't make a trade. In fact, there was a lot of that in September and early October as we kind of, had our overnight movement, a little bit of a chop fest and all that.
Hmm.
So then I'll do my trading until about 11 o'clock, 11:30. I have my community meeting lasts for 30 to 60 minutes with members of the Day Traders Guild, which is my community. We'll talk about the trades from the morning in the playbooks we're building. People will share their journals. We'll share successes, share struggles, etc. After that is my lunchtime. I try to take a full hour off. I'm not always successful, but I'll try to take a full hour away from my desk. I'll come back and I will trade the afternoon if there's something I really like. But if I'm sitting, let's say I'm sitting on $1,800 profit from the morning, I'm probably going to be a little apprehensive to touch that, and just try to bank that and put that away for the next day. Now, if I see an A+ setup, I'll take it, because that's what we need to do. But at that point, I'm kind of just working on content. I'm checking in with clients. I do Beyond the Bell at 3 o'clock, and at 3:30, I'm done. Now, it doesn't mean I'm done for the day. Sometimes 7, 8 o'clock at night, I'll come back and just see if anything crazy has happened, catch up on emails, that kind of stuff. But work-life balance is important to me, and I'm able to do quite a bit with that. So yeah, that's my basic day. It's not, like I said, I know there's people that work 12, 14, 16 hours in this business, and in most situations, if they've been trading as long as I have, they probably make more money than me, but I'm pretty happy. So that's what I value, and that's what's important to me.
Indeed. So walk us through how you decide when to enter or exit a trade and what indicators or signals you rely on the most.
So again, I think it kind of goes back to any individual trade follows whatever the individual setup is. So like for the Renko trades I was talking about, a trade is called an RTT long. So it's
Hmm.
uh, the Renkos make a short term high. It may be high a day, but it's just a short term high. They retrace. If I'm doing the NQ, I want to see about a 20 to 25 handle retracement, but usually no more than about 40. And then I
Hmm.
want to see that short-term high broken. And usually that's where I'm going to get in. But I'm going to consult my candlesticks. If there's a lot of candle shadows, maybe there's the last three candlesticks have tried to get above this area and they've sold off every time, I'm probably going to pass on that trade. The other thing I look at is the ADD, the advanced decline difference on the New York Stock Exchange. So basically what that is, let's say if the ADD is showing plus 1,000, that means 1,000 more stocks on the New York Stock Exchange are green versus red. And so that's a nice little snapshot that'll tell me how bullish is the sentiment overall, right? Because sometimes the NQ is running because Tesla and Nvidia are running, right? And the ES is red for the day. In fact, we've seen this
Hmm.
happen quite a bit over the last few months. And so that may keep me out of certain trades just because if the ADDs are negative, especially if like the ADD is a negative 1,000 or below, I probably don't want to go long at that point, and vice versa if it's positive. But yeah, I'm always my main indicator is just basic candlesticks. And
Hmm.
the candlesticks are always going to tell me the story, tell me the narrative, what's going on in the markets at any given time. And that's what I use to kind of frame my thesis. I like to say a trade is where a thesis meets a setup. So I have a thesis on the markets, like, I have a macro thesis. Like I think I'm pretty bullish for the rest of 2024. But ultimately, any given day could be green or red. And so, and then I have a kind of a 4 hour thesis because I look at 4 hour charts to start my day.
Hmm.
And then I will only take trades that sort of track with that thesis. And so
Hmm.
that keeps me out of a lot of garbage trades, right? It's not always about, I mean, yes, we have to be in winning trades to make money. That's a fact. But
Hmm.
a lot of traders, if they're break even traders, will just assume they need to get more winners or make their winners bigger. No, sometimes you can just cut some of your losers a little shorter, or not take a certain amount of trades that would have been losers and screen
Hmm.
them somehow. And that's how you build your P&L.
Right.
Mhm.
So, man, let's get into the emotional and psychological aspect of things. What
Sure.
role what role does emotional control play in your trading? Like, how do you manage stress or anxiety during losing streaks?
Well, the good news is I don't have a ton of long losing streaks anymore. I do have stretches where like I said, from about mid-September this year to just about 2 weeks ago, I was not finding a lot of trades on a day-to-day basis. Where I was usually I find maybe 10 trades a day I really like, and I'll narrow it down to about 3 or 4 to take. I'm lucky to find 3 or 4 that are even mediocre trades, and I've had as many days in the last 8 weeks where I haven't taken a single trade as I did through all of 2023.
Hmm.
And that's part of that is just like you said, emotional discipline and understanding. But it's part of it is just the confidence I have from doing this for many years and from seeing many, many, many things. But there's a misconception in trading that you can, you'll hear this, you have to eliminate your emotions from trading, right?
Right.
Well,
Right.
my response to that is good effing luck, right? Like we're humans, we're emotional creatures. We're going to be, there's nothing more emotional to us than our money, whether it's the money itself as a status symbol or the things that it can provide or the
Hmm.
freedom that it can provide. And so that's something that's very emotional to us. So if you're trying to eliminate your emotions while you're trading, you're not going to be able to do that. You're not going to be successful. Now, what you do need to do, and I know this sounds like the same thing, but it really isn't. You need to
Hmm.
not let those emotions influence your decision making. And that's the
Right.
key. There's nothing wrong with being excited when you're in a green trade or being a little frustrated if you're in a red trade, but you can't let that frustration or that excitement inform your decision making. And that's why,
Mm.
again, one way to eliminate emotions, like I say, use playbooks.
Hmm.
Okay. So if I have a setup, like my RTT long is a playbook, I have prerequisites, I have a trigger for an entry, and I have
Hmm.
my money management rules, and I follow them. And if I don't follow them, then that's my problem and I've screwed up. If I follow them and the trade wins, great. If I follow them and the trade loses, great.
Hmm.
I told you that, last time I checked 57% winning percentage. That means 43% of my trades don't work. Now, not
Hmm.
all of them are full losers. A few of those are break even. And
Right.
that's, again, you can eliminate or at least eliminate emotions from the decision making by trusting the numbers and trusting your edge. There's three things I need. If I'm coaching a trader, there's three things I need to know before we even get into anything. What's your
Hmm.
average winner? What's your average loser? What's your winning percentage? Right. This goes back to what I was saying just a couple minutes ago about average winner, eliminating losers. So if you were to tell me, if I was coaching you, Woods, and you told me I have a 50% winning percentage, my average winner is $500, my average loser is $500. Well,
Hmm.
not including commissions, you're a break-even trader, which if you're new in your trading career, it's actually not a bad place to be. So too many traders will look at that and say, okay, I need to take these $500 average winners and I need to make them $600 or a
Hmm.
thousand or whatever, right? Whatever crazy number you throw out there. What I'll
Right.
say is, okay, let's look at all these numbers. First of all, yes, let's try to get your average winner from $500 to $600.
Hmm.
Let's try to get your average loser from $500 to $400. Hey,
Hmm.
right there, that's enough to at least make you profitable. You're a net, every two trades, according to statistics, you're net $200, right?
Hmm.
So, make four trades, $400, et cetera, et cetera. But then you get to your winning percentage, and everyone thinks you need to get that up to 80%. Well, again, good luck. But if you can even just get it to 55,
Hmm.
57, 58, and now you're continuously increasing your average winner and decreasing your average loser. That's how you build accounts. That's how you build pass evals. That's how you make withdrawals. That's how you make a living doing this.
Man. And like earlier, you spoke about a significant loss. I want
Mhm.
to expand on that a bit more. Tell us about that experience on that specific loss. Like, how did you mentally recover and adjust? What was your approach on that?
Well, my big issue is in early in my trading career, again in the small cap world, is I was a chaser. Right. There's
Mhm.
probably a great number of people in the. I don't personally trade crypto, but I'm familiar with it, and I know people that do. So the a lot of crypto traders have been experiencing some of this over the past few years, right? I was a
Mm.
chaser. So in small caps, you're talking about a $2 stock. And if
Mhm.
there's news or announcements or even speculation or rumors or all this, not uncommon for some of those stocks to go up, 50% in a day, go from $2 to $3, right?
Mhm.
And you always, if you see that, if you're a rational person, you're going to think, okay, this went from $2 to $3. What idiot is buying this at $3? Well, I was that idiot for the first few months, right? Like I was the, you've heard in life, one of the most important things, don't be that guy. I was that
Mhm.
guy with that. And so I was consistently doing that because here's the devious thing about something like chasing or bag holding, holding losers past stop losses, or
Mhm.
even over trading. It works just enough to keep you doing it, right? If
Mm.
if if you lost if I lost every time I chased, I would have stopped chasing after a month. But
Mm.
every now and then that 50% winner goes up to 80%, and you're sitting there with a $4,000 loss, right? I remember there was a trade, one of my first years. I can't even remember what it was, but it was a biotech, and it went from like $5 to $12 in a single day. And I bought it at like $8 and like $10, and I made
Mm.
$5,000 in the total 38 seconds being in the trade, right? And
Man.
that was so stupid. But you know what? I gave all that back in the next 3 days because I kept doing
Oh,
the same
man.
stupid things, right? Like
Right.
like if you go out somewhere and you talk a little screwed up to somebody and they hit you in the mouth, you're not going to go do that again. But if you do
Right.
that and you get away with it once or twice, then you're gonna keep doing it. And even if you get punched in the mouth one or two times, you might still think you're a little slick, right? So it's but if you get hit in the mouth every time you say something to somebody, you're gonna stop doing it eventually. It's the negative positive feedback. So yeah, I was not getting hit in the mouth enough as a trader until eventually one day I was. And then you're forced to make changes with that. But yeah, it's Mark Douglas again talks about this as well. In trading with consistent losses, and I can tell you this from experience, there is legitimate mental trauma that needs to be dealt with, right? And I'm not comparing this trauma to somebody who's been assaulted or somebody who's been to war or anything like that, but it's diagnosable. It is, it is truth that there is mental trauma with that. So
Mhm.
like any kind of trauma, it needs to be addressed before you can move on. And that's
Mm.
where the structures and the frameworks of things like risk reward, trading methodology, average winner, average loser, winning percentage comes into play. So it wasn't until I really began to accept those things and understand that this is not the Wild West. I know there's all these idiots out there on YouTube or Twitter, all that have like, Wall Street or trader or something, and then like warrior or cowboy or whatever, right? Like that's great, and I appreciate the imagery from a marketing standpoint, but that's not what this is. When trading is done right, it is extremely boring. It really
Mhm.
is, but it's
Right.
extremely rewarding. So it's all it just whatever your individual trauma is with that, you need to address it, and almost all of us are going to have it, which is why so many traders fail, because it's been one of the best things that I've noticed in the past probably 10 years or so, especially since I've been in the trading world, is that I think one of the most positive things for traders in general, whether they accept it or not is a whole different thing, is a little more openness about discussing things like mental health, and especially among us guys, right? Like we're just supposed to bottle stuff up and not talk about it,
Right.
and yet you need to do that for trading. That doesn't mean you go see a psychiatrist or anything like that, but it means you have to understand what happened, why it happened, and how you can keep from happening it again.
Hmm. So tell me, how do you stay disciplined and sticking to your trading plan, especially when the markets are unpredictable?
Yeah, that's an excellent question, and again, it's just the uh man, I would say, again, it comes down to just trusting my numbers and trusting my playbook,
Mhm.
playbooks, and being very, like I said, I'm not eliminating the emotions from my head, but I'm eliminating them from my decision making. Right? You got to take that kind of that monkey brain and turn it off when it
Mhm.
comes to your actual decision making. So I put a lot of that's why I put so much time, energy, and effort into developing and building my playbooks, like I do with our day traders guild.
Mhm.
Because when you're just if you put in the time and energy on a playbook, like you come up with playbook ABC, right, and you've put as many as 3 to 4 months of work into it, of back and forward testing, live testing, paper trading, and then by the time you make your first real money trade, or even if it's not real money, let's say it's an eval, so it's still trading with consequences. Um, the you've already probably made 200, 300 trades just in paper trading, and you probably back tested another few thousand if you're lucky, and if you have the ability to do that. So before
Mhm.
you've put any real dollars on the line, or any kind of dollars on the line, you have months of experience, right? So that's how
Right.
you trade with confidence, and that's how, no matter what the markets are throwing at me, I've seen it before, right?
Mhm.
The I don't remember the exact quote, so you have to forgive me. And I've tried to repress most of Game of Thrones in my head because of how crappy the ending was of that show. But do you remember the I don't know if you watched that show, and there was a character in there who was kind of a planner and a schemer, right?
Uh-huh.
And I don't remember
Uh-huh.
the exact quote, but he said to one of the characters, he says, don't don't do this or this. In your head, fight every war, every battle, all the time. Everybody is your friend, everybody is your enemy. Every single possibility is happening right now. And that way, anything that happens is something you've seen before. And
Mm.
that really is about a good a mindset as you can be in trading. And once you've been doing this for a couple of years, and you take the time and the energy to put your playbooks together, I mean, listen, are the markets always going to surprise us or do some things we have? Yes. 90%
Mhm.
of the time, and 90% of the days in the market, it's just the market doing something it's done before. Like we're at all time
Mm.
highs now. And so by numbers on a chart, we are in places we've never been before, but we spent how many the last couple of years making new all-time highs almost on a weekly basis. We've seen this
Hmm.
before. We know what it's going to do, at least within probabilities, right? And that's accepting those probabilities, and more importantly, accepting the losses when they come. So that's sort of overall how I keep my mindset together.
So let's take a second to tap into your learning and your growth.
Mhm.
Tell us about what books, courses, or resources have been the biggest impact on your trading journey.
Oh, well, I would definitely say The Disciplined Trader by Mark Douglas. That's been a big one.
Hmm.
I would say most of the resources have been, like I said, mental or involving in trading psychology, simply because, the old saying, "There's a million ways to make money in the markets. It's just all hard to find." I found is very true, right? Like people are so focused, and I was right. Like I came in, it's like I just don't worry about psychology. Just find yourself a winning strategy, and you're fine. Just give me the strategies, right? I was buying courses, buying things.
Hmm.
Just give me the strategies. Give me the strategy. But I mean, there's been studies done on this, like prop firms, like the real prop firms, the one that have offices in New York, Chicago, places like that, have done studies where they'll give people with no trading experience what they know is a winning playbook, what is their most popular playbook, and they can't trade it because they don't have the
Hmm.
mental skills. So
Right.
for me, Mark Douglas, anything by Mark Douglas you can get your hands on is very, very important. In fact, you can go to YouTube and just search Mark Douglas trading psychology. There's all sorts of seminars that are always getting put up and then pulled down or pulled up. Anything you can get your hands on by Mark Douglas is really, really good. Again, if somebody's just getting into trading, or maybe they've been struggling, and from a technical analysis point, like, oh, what do I trade? There's all these different, especially with Renko charts, with market profile, TPO, all that stuff is out there now. Heat maps, like Bookmap and some other places do. Honestly, just start with basic candlesticks. I don't know why they've been going out of style the last few years, because even candlestick practitioners like myself will tell you, you don't just need candlesticks. You need other things as well, but candlesticks still can set the narrative and tell the story. So anything, by Steve Nison, Nison. You can usually get his DVDs and books secondhand on eBay. Can't recommend that enough. So if somebody that's listening is kind of struggling with that, start with Mark Douglas and trading psychology, Steve Nison and technical analysis, and then just kind of see where it leads you. Hopefully, it leads you to the Day Traders Guild, so you can join us at TeresiasTrading.com.
Right. Right. And let's talk about the tedious process.
Yeah.
How important is journaling your trades? What insights have you gained from keeping a trading journal?
Oh, I mean, vital. It's. I've said I can't be more clear on this. If you are a trader, especially a day trader, and you are not journaling
Hmm.
your trades, you are wasting your time. End of discussion. End of story. Because you don't
Hmm.
truly know what's working and what's not. Now, there's two aspects to a trading journal. There's the record of trades, right? And most
Hmm.
brokerages will keep that for you now. Like that wasn't a thing when I first started. You had to like manually export. Sometimes you had to actually type in trades and stuff.
Hmm.
Now, there's plenty of programs out there. It takes 30 seconds to import trades. But like you can get into some deep analysis with that. But I always recommend starting with time of the day of the week, right? And don't
Hmm.
don't make decision off 3 weeks or anything like that. But after you've been doing this a year or two, you'll find out, gosh, I actually don't do great on Friday afternoons. Maybe I should stop at Friday at noon. Or you know what, I'm slow getting going on the week. On Mondays I don't trade great, so I'm gonna back off a little bit on that. Or boy, Tuesdays and Wednesdays are my best trading days. Maybe I need to not double or triple, but slightly increase my position size on those days, right? So
Right.
yeah, it's and those are just the basics, right? There's the software now can break down a whole bunch of other things. But as far as like when you're at your best as a trader, after a couple years, you have enough data to kind of start making at least a few decisions on that based on when you're at your best. But that's sort of entry level stuff. There's always new stuff coming out. I you know. And anytime you're